TGIF Warriors. Hope everyone had a good week. Hi, Kevin. So interesting, gold tried both sides of the formation here and then here. And when the dollar turned back up, gold, to me, at least right now, looks like a false breakout. So we'll see. It's all dependent upon this, I believe. Okay, so for gold to break out, we need this to be something like this. And then, down here, which is, we held 50% before the bounce. If we do something like this, we could test the 61.8 level at 92.46. But if this was it, if this was the dollar pullback before we head up towards 95.5, 96, and I'd assume that we could have a breakdown in gold. And actually, silver is weaker. Looks a little weaker in the gold silver ratio. Where are you? Here you are. Trying to turn up. We've had this bounce from 69. Let's look at a little longer time frame. I mean, there's really not a lot you could say, but it's pretty quiet down here after a tremendous move from here. So, we could be grinding out some type of rounding bottom here. Although the RSI number on the daily at the low wasn't ideal. If we had one more low, I think it would be, and we hold 30 on the next low. Hi, Shepard. Hello, Money. How are you? Your Money. Reminds me of that movie Swingers with Jon Favreau and his buddy, and they go to Vegas, and he calls the guy Money. So with this happening and a little, you like it, Joe? Huh? Did you ever have a girlfriend that took you 6 years to get over? Hi, Alexander. Okay. So EG was a trade of the week. Coincidentally, last time we stopped at 61.8. Maybe, maybe Stell's right up here at 78.6, and you risk the high of the move. Yeah, that's it, Joe. You're so money you don't even know it. Okay, so this was really a tremendous week. So powerful once it got over 89.40, and this told you that if you wanted to fade the dollar, you did it with this, right? Not with this, fade the dollar. So not with this. That's why EG is so important. You could have been bearish the dollar and bought cable and lost money. So trade selection, very important. Yen's still working its way in, this triangle that Blake has shown, that the team has shown on chart of the week. USD CAD holding up okay. See what kind of week we're having in here in Canada. There's your daily. There's your weekly. It is Friday, isn't it? So we have an up week. The off number was 30.91. That true? So we have a 2-week reversal in Canada. Hi, Ignatius, Hugo, Monica. So this is a decent signal on a 2-week turn. We're closing above the close from 2 Fridays ago. A little bit of a wick, but it's trying to get back inside this trend line. And you would think that, with what crude has done, it would have done better, but there's still a chance, especially if the dollar is turning good up here, turning good from here. Here's your 4-hour. If we have something like this from here in the dollar, it's going to take you up towards this 95.50 or so. Of course, we still need to take out this high, close above 94 for that to happen. So I see two scenarios, either A, B, C, and then we go, or this was it, just a 50% pullback. Same thing in Euro. It stalled right at the off number. So, here's an example of the off number. It was a target for me. The off number this week was 1904, and the high was 1917. So just a little bit above the 61.8. Came off pretty good. So let's see what happens here. This could just be a little failing rally and we head back down. I'd say back under 118. There's problems in Euro. That should take us back down to this space or lower. So that, the jury's out. I think we'll know next week. We're getting a pop in equities. When the dollar recovered, equities sold off. So it's all about the dollar. They're probably, that's one thing they could sacrifice that would be invisible, is to sacrifice the dollar. So, that's probably a better question for Steve Volge or Stell. So, I'm not that great at figuring out, Fed stuff and what it means to the market. Thanks for the question, though. Wrong person. You guys know we have this big event coming up, right? So what a lineup, Peter Schiff and Danielle. Interviewed Mark, Peter several times, Jack a few times, never interviewed Anthony. Lynn I had scheduled for April at our last, when we had our last summit. I had to cancel her. I'm glad you guys got her back. Michael Guyad, I used to, they're shy girl. Okay. Ashraf is a lot of fun to interview. Stephen Goldstein, I've never interviewed. Daniel Lakel, I have. Haven't interviewed Axel or Chris Pulver, Chris Weston. I think Brent I have. So, and we have like great sponsors for this. So you guys want to get registered for this. And if you can, if you're active on Twitter, you just take this ad, retweet what I have in my stream or any of the team. I just retweeted Blake's. So I can't remember a summit with this many, what they call it in Hollywood when you're on the A-list or something. These are all A-listers. Okay, so this link, yeah, maybe one of the team will put it in the...
I'm going to do it right now. Good morning.
There, see, Stell's on it. Okay, and, go check your bank account balance because we're also getting ready to have our fall promo where you're going to get a nice discount on becoming part of our community. I hope everyone had a good week. I know that the team and I, like every week, lay it out on the floor for you guys every week, hoping to add value and help you navigate this stuff. So I hope that we helped you and added value to what you're trying to accomplish as a trader, because our mission statement is to build up and edify you and other traders every day. Okay, thank you, Didier. Blake, TGIF, my friend, how are you? How's your microphone?
Hey, can you hear me?
Yeah, I can hear you. Sound like, Howard Stern. That big.
I'm happy it's Friday. It's been a long, short week.
Oh yeah.
and I was trying to figure out why it has been such a long, short week, and I think it's really the easiest way to kind of explain it here is if you look at the S&P and you go to Monday, okay, here's basically Monday we sell off, Tuesday we bounce, or wait, let me make sure I have that correct.
Monday we sell off.
Today,
or was it Tuesday? Tuesday.
I'm sorry, Tuesday the 8th.
Yeah.
So right here, Tuesday the 8th, we sell off, right?
Yeah.
Then Wednesday we rally.
Yeah.
Thursday we sell off.
Yeah.
Today we're rallying. I mean, it's like, dude, it's
try to get 2 days in a row in the same direction.
It's gnarly if you're out there just trying to be directional in the market. It's like good damn luck, and that makes it for a very, we're getting volatility intraday, but I said this actually on Tuesday to like people in our chat room, and I have to say that when it's like risk on, it is risk on, like straight up risk on, or if it's risk off, it's straight up risk off, and it's like there's no like letting off the gas pedal. It seems it's like we're going straight up or we're going straight down. Now obviously once the North American session finishes, we start to see some volatility, but man, it's that makes for intraday tough trading conditions here in North America when it's just straight up or straight down. Things obviously we're into Friday, so I'm assuming things are going to cool down just a bit, and we're going to go through all the charts. But that's why to me it feels like such a long week, and it's a short week. So anyway, a couple things I wanted to mention. Today is September 11th. And obviously in remembrance of September 11th, 2001, I'd like everybody here just to think about where you were at that historic and very, unfortunate moment, and just think about that, and just so you don't forget it. It was such an important, if you're in the markets, not even in the markets, I should say, if it's just one of the most important events that has happened in my lifetime and probably in modern history is the events that took place on September 11th. So it doesn't matter where you were at in the world, it was big news. I mean, there's obviously been there's been a lot of things that have happened around the world that could be viewed as a horrible event, no matter what, you're probably thinking other events too, but just that one for those of us that are in the markets was extremely historic. So just please take a moment to remember where you're at and remember the lives that were lost there. Okay. Another thing, on a much lighter note, we have the Forex Analytics offer in play. So it is our new seasonal offer, and it's kind of been a little overshadowed by the event that we have, the Trader Summit event that's coming up. Sorry, it's Friday, so, and it's still early in the morning here. So for those of you that have been waiting for a Forex Analytics offer, we have an offer. We haven't put out an offer in, I want to say 6 months. It's been a while.
It is live, by the way. It is live. Yeah.
What is?
The offer is live. Yeah.
The offer is live.
Yeah. Yes. I knew it was live. It's right here on my screen. Yeah. I knew it was live. I'm just saying that I don't think we've had an offer for 6 months or so. So you guys take advantage of it. Now I'm going to also tell you next week we'll be running. I think we'll probably do it for the next couple weeks, right, Steve, as we head into the event?
Yes.
Okay, so we're going to run a little bit of a promo for you guys. Now, and I'm going to tell you what it is, and just be ready for it next week. And it doesn't matter if you take advantage of the offer now because it's live for those of you that have been wanting to be part of the ForexAnalytix family. But we're also going to have 3 lucky winners over the next couple weeks. We're gonna put out some tweets with the ForexAnalytix account. All you're gonna have to do is retweet the ForexAnalytix, and then also tweet at ForexAnalytix. Say I want to be in the giveaway, and we're gonna give away a T-shirt, mug, mouse pad, and we're going to give 3 of these packages away, and then also 3 months of access of ForexAnalytix for free. So we're going to be giving away 3 of those packages over the course of the next couple weeks. So and it's going to be random. It's going to be a random draw, but all you're going to have to do to automatically enter is retweet. So we're going to have to know, obviously, you're going to have to tell us what your, we're going to have to find out who the Twitter handle is. You have to retweet our tweets for ForexAnalytix, and then also message ForexAnalytix, I want to be part of this giveaway. And that's it. So we got some pretty exciting stuff. And look, if you take advantage of the offer today, we're going to just add 3 months of free service to your service. So, no matter what package you decide to take. So anyway, just want to let you guys know that is happening. Okay, now that I've got all that out of the way, I guess one last thing I should mention is I'm going to my first restaurant since February, going out to eat. This is big news. What do you guys think about that? I know Stelios.
You GDP booster.
I don't think McDonald's qualifies as a restaurant.
No, this is going to be the first sit-down restaurant we're going to. We're going to be sitting outside, but
enjoy, Blake.
Yeah,
enjoy.
It's my wife and I's 17-year anniversary. We've been together like 400 years, but married 17. So,
congratulations! Congratulations!
Thanks. All right. Anyway, that's the last bit of exciting news I got for you guys. All right. It is our anniversary.
May you live another 50.
Thank you. Thank you. Let's see. All right. Let's go to. Yeah, I was sorry. I was just reading some of your comments from where you were at during 9/11. And that's, Joe, who's on our team. He's obviously in New Jersey. I was actually on my trading floor in Dallas, Texas, because obviously I'd get to the office as the futures were opening. And I just remember standing there with my coffee looking at the TV. We have multiple TVs up on the, hanging from our ceiling. And we're just sitting there looking at, the first building going, wow, is that really an accident? It's like, just kind of in awe type of like, I just do, wow, crazy. Anyway, still remember it. I'm sure most of you guys do too. Like it was yesterday. Okay, let's get to it. All right, let's talk about the euro. So the euro failure yesterday at 119, significant in my opinion, because this is, this is going to be key now. Yesterday we were talking about some resistance at the 118.50, which is a 38% retracement. But because we hit the 618, now we're probably looking more to like a consolidation. So 119.10 is going to be, in my opinion, pretty significant resistance. Now support is going to be 117.50. I doubt we're going to 117.50 today. I think 118 is going to, manage to stall any downside moves. So, we could hit a new low here, 118.10. We could break below that. I just don't think we're going to get much below 118 today. 117.50 is the big kahuna though. If we break through that, that's where it gets a little dangerous for euro longs. Let's talk about the cable. Obviously the cable got just absolutely destroyed yesterday. There is a there was an article, and maybe one of you guys in the UK could talk about this article that's been included in the Brexit negotiations, which in essence it really feels, and maybe Stelios might be able to talk a little bit about it. It basically is like it pretty much puts a no deal Brexit on the table, and it's like almost feels like that Boris Johnson is pushing for that. Like he just wants a break. I don't know. Anyway, the cable's been under some severe pressure, and now we're below upward sloping trend lines. We're at 128. I think the risk is now that we could continue lower to like the 618, as early as today, which would be 127.13, and I think that's the next level support if we continue to break down. Now, if the cable gets a little bit of a bounce or a little bit of reprieve here, 129 should cap the rallies. That's the underside of that trend line, and also the previous support. So I'm going to write down 129 as being resistance, and I'm going to have to put that the cable has gone from bullish to bearish rather quickly. And unless something changes with the negotiations of Brexit, we've got some serious serious issues here for on the bullish side. All right, let's go over to the Aussie. Aussie capped at 73.10, support at 72. I think we've written down the same numbers for the last couple of days. Nothing's changed here. And, I fluctuate from going to bullish to range. It's like, I kind of want to say that we're bullish because we're in this ascending channel, but at the same time, the bullish trend is really difficult unless you're buying a severe dip. Like you get back down here towards 71.50, that seems like a more logical place to be long the Aussie rather than being long up here towards resistance. So, anyway, I'm going to keep it on range for now. Kiwi, and I've, obviously struggle with this too. Same here, 66, 67, same deal as yesterday. Slight up ascending channel, but, would you rather be long down here or up here? I mean, I'd rather be long down here, not up here. So that's the problem I have with the Kiwi right now. What is it? 60, 66. I don't think it's great support. I don't think it's great resistance. Same with the Aussie. So, but we're just kind of range bound right now. Dollar Canadian. Let's talk a little bit about this because Dale has, and you notice the dips have been bought that support this breakout of this multi-year or multi-month trend line. That's a big deal where the dollar Canadian is supported. Now, resistance day is going to be 132. So I'll just write that down. And support is going to be 131.50 or 131.30. It's yesterday's lows. I'm going to keep it in range, but really it's borderline going to go to bullish, especially if we start breaking above these highs. Now, the problem with the dollar Canadian is I don't think we're going to break to these highs unless or until we have, probably the FOMC next week. If it's going to do it, if the dollar is going to recover, that's going to be probably it. Or if we have a severe risk off type of event, where we see, equities drop below 3,200, and then the dollar Canadian is going to be trading up at 133 just on that alone. But it is something to think about as we're trying to develop a bottom here. This is if and I think I drew this for you guys yesterday, but I'll draw it again today. I think what's happening here is you're seeing something that's looking like this, and we're seeing this bottom being forged out. Does that mean it's going higher today? Probably not. Does it, does that mean we're breaking out above this, 172.50 today? No, probably not, but it is building a pretty good base. Okay. So just keep that in mind. Dollar Mexican peso, big rejection yesterday, I guess it was Wednesday night. Big rejection at 21.95, slammed us down to the 618. We hit the 618, and this is the 618 of this move right here. February low, spike high, 618. Now, if we get back above 21.50, it turns bullish, because that's going to be a false breakdown. So just remember that going into today. And all right, 21, 27. It's bearish for now. But, if you're short and we get above 21.50, it should squeeze. I'm working my way down. Dollar Swiss, 90.50, 92. I don't know how many times we've written down those numbers. Oh, shoot. I did that wrong. Sorry. My bad. $90.50, 92. You know what? That is still bearish while we're below 92. But one of the things about this is kind of like the dollar Canadian. We're building a pretty darn good base here, so a break back above 92 would be bullish. I mean, we would rally for probably a couple hundred pips, I would think. But anyway, something to think about. It's still bearish while we're below 92. 92 is significant. Okay. Dollar yen, same thing as yesterday, except we're going to have to bring down the resistance a little bit. So 106.40, 105.75. $106.40, 105.75. Yeah, you never know. We might get a breakout sooner or later. I don't think it's going to happen today, but who knows? We do have inflation data.
Guys would buy volatility spreads here, Blake.
Yeah, I mean, that's one. It's hard to do it on the yen, though, man.
Yeah.
I don't know what's going to move the needle, Well, I guess the FOMC next week, but.
Because you don't know which way it's going to break out. So, you get long a put, you get long a call. And with the idea that one's going to more than compensate for the other.
Yeah. I mean, you cut one loose, right? Yeah. I mean, you could do that. You could see we're winding up, though. That's for sure.
Yeah.
Or you just wait for, one of these two lines to break. That's why I have that.
Unless you're sleeping.
Yeah. All right. Let's go over to the euro dollar. We have news coming out, right, guys?
We have inflation.
Yes, we do.
1 minute.
Okay. So this is data flash. This is what you get with ForexAnalytix. Here is Bloomberg. Oops, shoot. Let me move this over really quick. I did not mean to do what I just did, but. Okay. There's data flash. You know what? Hold on. Put this on a 1 minute chart. Okay, there's data flash. There's Bloomberg. Here's your data so you can see. Okay. You can watch the data here and here and just see how quickly it pulls up on Bloomberg versus data flash. And look at how much easier it is to interpret on data flash with the red and green, with just even seeing like, okay, this is forecast. This is actual numbers. Like, see how fast it was? Good inflation data. Euro dropped a little bit.
It's all green, but just 0.1 better. Actually,
Yeah,
no,
but
0.2.
still, you know, people are
Yeah.
like, hey, you know, that they're going to factor that into the Fed's decision next week, right?
Yes, that's correct.
That's the important thing, is that the Fed is meeting next week. You know, not saying that this is, you know, this is going to be the end all be all, but people that are short dollars are probably thinking, hey, you know what, we got to, you know, pay attention to that. Let's see what futures do, because I think it's one of those things that if futures like start to, they're not doing anything, but if futures start to roll over a little bit, you know, people start freaking out a little bit about, you know, possible inflation coming. That would be bearish for equities, right? Means the Fed would take their foot off the gas a little bit. Speaking of equities, let's
No chance.
finish up. Huh?
No chance.
I don't think we're going to see any inflation either. But
No, I'm not saying we're not going to see inflation. I think there is no chance they're going to do something about it. That's why they're trying to prepare everybody that they're targeting for higher inflation.
Yeah, this is what they want.
No, this is what they claim to want. So
Right.
when it comes, they're not forced to do something about it.
Yeah.
The last thing the Fed wants is inflation, because then they'll have to prick the bubble because the only way you can tame inflation is by raising rates. And we know that this economy can't handle high rates, as simple as that.
Yep, it can't. We're going to stay low forever until Jerome Powell's out of his position, and he can say, all right, your problem, not mine. I'm done. Okay. 1966, just so you guys know, by the way, Goldman's long gold. They got long yesterday. Like they got long, and they said that their stops are below 1907, I think is what they said.
Wow.
So I'm going to tell you this right now about
$50.
I'm going to tell you this about gold. I think everybody's stops are below 1900. If you're long gold, your stops are below 1900. Period. End of story. There's no like if and or buts about that. If you're trading gold, right? So my 2 cents about gold is if we break through 1900, there's going to be hell to pay for longs. You know, when I say that, I'm talking, you know, we would see at least 100, maybe 200 points drop.
There is a net pocket to 1820. The next area of support is at 1820, actually.
Yeah, I would say that this would happen. You know, something like this. It would be like whoop, you know, just a vacuum. That's a good way to look at it, right? Notice where we capped yesterday too.
Yeah.
Trend line, underside of trend line. So yeah, you guys want to lean on Goldman a little bit? Get short some gold. I don't know if that's the smartest idea, but you know, whoops.
They're all Goldmans.
I think while we're above, this has got to be bullish. As I was doing this while Steve was talking, here's the S&P, and I'll just briefly just say this again about the S&P, or I'll kind of elaborate what I put on Twitter yesterday. Shoulder, head, shoulder. People trying to play it long down here. I think if we break through 33.25, then you've got some problems. Now, also, if you just look that we just broke out of this channel, which now risks a move lower, and then I should probably write. $3,300 is going to be significant, okay? But 33.30 is going to be support down here. So the spike low from yesterday. Okay. All right. Where am I at?
Where's your next support level, Blake, underneath that low that we had this week?
The below 3,300?
Yeah.
Oh, I think we see the 200-day then. So if we break through this week's lows,
yeah,
we should see this.
Okay. Wow.
See the 200-day? See this trend line?
3,100, 3080.
Yeah. So I percentage wise, you know, what is that? 2%? No, 6% actually. About another 6% drop. So that seems pretty logical to me, actually.
Thank you.
I don't think it's happening today, but you never know. You know, I mean, I don't think we're going to break down today is what I'm saying. I know we're not dropping 6% today. I'm just saying that I don't think we're going to be even testing those levels today, but it's Friday, man. It's freaky. And it's September 11th, you know. So dollar index, so you never can tell. Notice the dollar index hammer yesterday. That puts us at risk of a move back to 94. That means support now is 92.70. So support would be yesterday's lows, 92.70, resistance 94, and that is significant. And we have to stay bearish while we're below 94. But if we break through 94, we flip to range automatically, because then, in my opinion, we do this. If we break above 94, then we're going to be trading in this range next, which will be from 94 to 95.50, right? Maybe even might even be able to take that up towards 96. But that's what would happen if we broke out. And do I think it's bullish? No. But do I think we get into a new range? Yes. Last but not least, US dollar, Norwegian krona, pretty easy. 920. Support would be yesterday's lows, would be 892. Oops. 892. 920. We have to stay bearish while we're below that, but if we get to it, whoops. If we get above 920, okay, this reverses course of everything. I don't think that's happening this week. That's probably for next week, following that FOMC if it happens, but you know what I'm saying. That's all possible. All right, guys. I want to wish you a happy Friday, although it is September 11th. So there's always going to be that for me, you know, and I know for a lot of you as well, there's going to be that overarching theme on days like today on September 11th, when they come by once a year. It is for me, it's more of I actually end up, you know, having, and ever since September 11th, it's a very somber day for me typically. You know, so, if you're in the same boat as myself, I hope you try to make the best of your day and have a great weekend. And don't forget 2 things. The Trader Summit, if you haven't registered, please register this weekend so you reserve your seat. I don't care if you're like, well, I'm not going to be able to sit in live. Things will change. And if they do, and then you can't get in live, that's going to suck. So make sure you register, so you get to see all these speakers. And
Blake,
sure, nope.
There is one thing
I'm
we
not
can
finished. Nope. And make
on
sure,
the event.
Nope. And then make sure that you guys sign up for the new ForexAnalytix offer that is out. Okay, Steve, what were you going to say?
We have something we can now announce on the event because we got the news a few hours ago. Abigail Doolittle from Bloomberg got the okay, so she's going to be moderating the debate.
So Abigail Doolittle, if you don't know who she is, she's the chartress on Twitter. She joined Bloomberg, I'm going to say like about 3 or 4 years ago, and she interviews Joe. She's always on Joe's segment. But she's on Bloomberg every day. Charting Futures, I think is what it is, her show is. Anyway, yeah, so she'll be hosting the debate between these 4 gentlemen. So pretty exciting stuff. And then also I get to interview Danielle DeMartino Booth. Yeah, so it'll be great. All right, guys, I'm going to pass it over to you. You guys have a great weekend. Thanks, everybody.
Thank you, mate.
You too, Blake.
Enjoy the
Thank
weekend.
you, Blake. Thank you.
You guys.
Hello, everybody.
Hey, Stel.
It's Dale.
September 11th, actually, my experience was a bit mixed because it was the last day of my internship at Barclays, and it was the day I got the offer to be a full-time trader, and I was very happy. And then we got back to the desk, and everybody was glued to the screens. We're like, "What happened?" Because we were out with my boss. So it it was a very strange day for me anyway. Yeah, so I think everybody remembers where they were when that happened.
Very true.
And Dale, you were like, 70 years old at the time. What were you doing? I'm kidding.
Actually, I remember watching it. It was before I left for the office, and it happened. So
Yeah.
I just went to the office and closed it for the day. I was pretty upset.
Yeah, it was
because you didn't know at first when you were watching it that both of the buildings were going to come down. You just saw a plane stuck in a window, on the side of the building. You had no idea.
Yeah, it was
Till
horrible.
you saw the other plane hit the other building, then you knew that it was an attack.
Yeah.
At first they didn't know. You're watching CNBC. It just looked like maybe it was an accident. So anyway, that's my memory of it.
Yeah, it was horrible. That's for sure.
And everyone was calling me to buy gold that day.
Yeah,
it worked.
Certainly
of course.
Okay, so
to be honest, whichever day within the past decades somebody advised you to buy gold, you would be in the money at the moment.
Yeah.
Depends on when you bought more or less, but you would in any case be in the money.
And short airlines.
Yeah. Same with stock indices, actually. They're always going to be going up, right? But anyway, that's a different story. So today has been pretty much about the UK once again. First of all, let's get the data out of the way. We had data. GDP came in basically as expected. Industrial production better than expected. Manufacturing production a lot better than expected. But really, these are not that important at the moment because there was a withdrawal agreement signed between the UK and the EU in January. Some detail in it, and the Brits basically are passing a bill to rewrite some parts of that, which is you could say it's not legal, or that's what the Europeans are saying. Basically, one of the key points of the withdrawal agreement is the border between the Northern Ireland and Ireland and the UK, and because Ireland is going to stay in the EU, and the Brits are now trying to change things, or basically give them the ability to change things going forward, which is not something that the Europeans like. So this is another move.
That was always the hot point of the negotiation.
Yeah, that was the one, and fishing as well. But it looks like Boris Johnson is just, playing all his cards and trying to be, he's playing hardball. So is it going to work? Is it not? I don't know. We saw with Theresa May all those years, she was not playing hardball and nothing happened. Nothing came out of it. So he's trying a different approach. Let's see how that goes. But it's not looking good for the pound. There was some good news because the UK signed an agreement with Japan, and they called it, historic trade deal agreement, blah, blah, and all that. Although the actual effect on UK GDP is probably going to be below 0.1%. That's the estimation anyway, but it's still something, and it's something that the UK government are going to really push forward and talk about. But bottom line,
from what you're saying, a multiple of the US-China trade deal and its effect on US GDP.
yeah. But bottom line is the pound is struggling and has been struggling for days now. I've started already very slowly to short Euro Pound. I shorted a quarter of position only at 92.15, and I'm going to be shorting up to 94 if we get there. This is unleveraged and also with a medium-term horizon. And I think the way I look at it, what's priced into this now, pretty much a very good chance of the UK basically leaving without a deal. And I think that is still not the number one scenario. I think it's 50-50, and the market is definitely not pricing 50-50. So that's for the UK. We had minor European data. I'm not really going to get into that at all. And no progress in US and China, nothing else. Trump is putting pressure on the sale of TikTok. The usual, nothing new to report. So basically we're waiting for the weekend, waiting for the FOMC next week. And God help us. And schools are opening here on Monday, so we are very worried. Let's put it that way. Yeah, so that's pretty much it for me.
President Trump nominated for the Nobel Peace Prize.
For what?
I have a bad joke. You guys will yell at me. It really did happen, but I'm not going to say.
No,
that.
no. It
Okay,
doesn't
don't
surprise me.
don't say it. Don't say it.
It's very good. I'll tell you guys afterwards.
Yes.
Okay.
Yes.
All right. Anyway, that's the truth. He was nominated for the Nobel Peace. I think based on the peace agreement with that Middle East country and Israel.
Okay.
Yeah.
Cool.
Interesting.
Okay.
Oh yeah.
All right.
Obama won it. Yeah.
Obama did win it. Yes.
Yeah.
I still haven't figured out why, or why, for that matter, half the candidates that win it. I still haven't figured that out. But probably it's because I have a very low
because he
understanding.
didn't enforce his own red line, so they gave it to him.
Whatever,
The red line in Syria about using chemical
politics
weapons.
is becoming worse and worse, by every year that passes. Anyhow, this is not a political show. We only discuss developments that affect directly the economy, and a Nobel Prize is definitely, not one that can affect the economy one way or another. Either he wins it or he doesn't. Speaking of jokes, by the way, Dale, if you wanted a joke, I did read one yesterday or the day before. Trump said that he's going to focus his efforts on the second term to reduce debt. So that was good. That was the best one out there.
That's a good one.
Well, he's the king of debt, he says. So.
No. Let me be very fair. I don't see any difference between Trump and the previous presidents. They've all been doing the exact same thing, exponentially increasing the deficits and the debts based on where they initially found them. So it's, the progression is geometrical, so it is exponential, but more or less it's the same, equation of exponential progression.
Ziggy said he meant reduce his debt.
Anyhow,
that's a good one.
Ziggy always has good jokes. Anyhow,
he's a character. Anyway,
going to our favorite markets.
Yeah, but you know what? Wouldn't it be a good idea with rates being where they are for the U.S. to roll all their short-term debt into longer dated paper at
Who's going to buy it? Who's going to buy it? Who is going to buy it? That's my question.
The Fed.
Okay, so if the thesis is that the U.S. can totally shift the maturities, change the duration of the debt to a much longer term one, with the Fed being the only buyer, if the plan is that the Fed is going to be the only buyer, which it's going to end up being, there's no question about it, then why do you care if the maturities are short term or long term? So, it becomes a question, if you openly admit that the Fed is going to be the only player in the game of buying treasuries, maturities don't matter. The whole debt can mature the next day, and it's going to be one and the same. If the plan is that the Fed should not be the only buyer of US debt, and you try under that pretense to roll over the debt and gather people around and tell them, listen, we've been telling you the following things. A, we want to really increase inflation. That's our effort. We don't know if we're going to succeed, but that's what we're going to be trying to do. And two, how would you feel about buying 30-year promises to repay you in dollars in 30 years, with taking into account our intention to increase inflation? Who's going to buy the debt? Who's going to buy the debt, and at what price?
Okay, well, we should do that as individuals. Roll our short-term debt into long-term debt.
Yeah, I mean, on an individual basis, it makes sense. And
Yeah.
people that do have the credit rating to do so, yeah,
Yeah.
they should be doing so, because in essence, you'll have inflation working in your favor, right?
Right.
People in essence that get mortgages as we speak, 30-year mortgages with rates of like 3%, some in some cases
Yeah.
below 3%. Also considering the fact that interest payments are tax deductible, so you have to put that in the equation as well. In my opinion, are actually borrowing money at a negative real rate.
Yeah. That's yeah.
Yeah. So in
That's
essence,
probably what's still fueling the real estate markets globally.
yes. So in essence, they're more or less paying you to buy yourself a house. So the only thing you actually need is a credit rating to do so. Once you have that, paying rent makes more or less little sense. Although to be fair, then you have to put other things in the equation, which is costs of maintaining a property, property taxes, in which in some states, from what I've seen, are absurdly high. So if you put these considerations in the equation, depends on what kind of house you want to live in. The cost benefit analysis might, in some cases, change substantially. But if we assume that there were no, taxes, state taxes on property, then it would be much, simpler to say that, renting would make zero sense. Everybody should be buying, everybody that can actually take a mortgage. House prices will plummet when any inflation kicks in with subsequent interest rate hikes. Fixed rate is not that cheap. I actually haven't seen where fixed rates are in the US at the moment, but I would assume that they should also be probably, rather logical, I would say. Worst case scenario, you can protect yourself. There are ways that you can protect yourself or hedge your exposure, your mortgage exposure, and it's still rather cheap to do, I would have to say. Inflation is going to obviously, greatly affect prices. This is not a conversation about real estate. If you want my opinion, what inflation is going to be due to asset prices, in my opinion, what inflation is going to do to asset prices, houses in this case, real estate, I think that the nominal prices are of course going to increase. Will they increase, to match up with inflation? Probably not. So yeah, probably inflation is going to end up hurting real estate when it has to do with real prices. Probably not really substantially though. Anyhow, so yesterday, quite an interesting day in the markets. A lot of enthusiasm the day before that. All the buy the dippers really thought that, S&P finding support in this support area, closing above it, because intraday, the day before yesterday, it actually penetrated through this confluence of supports, 50 DMA and horizontal support resistance area. So many of them got enthusiastic with the rebound yesterday, only for the day before yesterday, only for yesterday to come and in essence erase almost all the gains. I do think that if we move on a 4-hour chart, I do think that there is a very good chance that equities are going to keep failing from here. I'm monitoring this ascending trend line supporting the S&P. The Nasdaq, though, has already broken through this channel. And if you remember, one of the last things I said in yesterday's webinar, I looked at the Nasdaq daily chart actually, and I said that having to do with indices, be careful. Yesterday we were actually testing that trend line when the webinar was finishing. I said that be careful because today is going to be a super important day. We're back testing this broken channels trend line support as resistance, and if we get rejected from here, that's going to be a bearish development, and that's exactly what happened. So if you look at the 4-hour chart, we back tested this trend line. We very briefly breached through it, but we didn't even manage to close on the 4-hour candle above it, and we got rejected. So I have to say that the market is still looking heavy to me, and I do think there is a very, very good likelihood that we're going to see at least one more leg to the downside, in which case I would be looking for 10,250, 10,300 to be an area of interest having to do with the Nasdaq. And I also explained yesterday why I consider probably the Nasdaq to be the best index to monitor at the moment. Yes, the S&P is the global barometer for risk, and yes, market participants usually pay more attention to the S&P. But knowing that the Nasdaq and very specifically like a very few selected stocks in the Nasdaq were the main reason why we had that prolonged rally in the end, despite the abysmal breadth from the market. I mean, we had a lot more equities actually dropping in price and a lot less going higher, but these few selected stocks, due to their weight on the index, actually kept pulling the market higher and higher. So I do believe that now that they've turned lower, the Nasdaq is probably leading the way to the downside as well. Now, of course, there are a lot of people that believe that this can prove to be a healthy rotation out of these stocks, momentum stocks, extremely overbought stocks, that went into this mania phase, also based on the premise that these are the stay-at-home stocks. Many of them did benefit, obviously, from lockdowns, like Amazon and Netflix. Now, of course, somebody would ask, okay, but what does Apple have to do with that? I mean, it doesn't. To be honest, some of them just benefited from the fact that people were looking in big companies to invest and hold, companies that actually had a good track record of performance during the past few years, and Apple was one of these cases. Because to be fair, I mean, Apple sells products that mostly have to do with discretionary spending. I mean, people just won't buy a new iPhone if they've lost their jobs. Hopefully they're not buying new iPhones if they're just losing their jobs. I mean, they will hold to the previous one and hope that next year is going to be a better year to change it. But as I said, many things in this market don't make much sense. In any case, Nasdaq should be leading lower. Do I think that somebody should buy into the idea that there's going to be a rotation out of stay-at-home stocks to more traditional stocks, like, let's say, battered down stocks at the Russell or Dow Jones or whatever? I'm extremely skeptical, and the reason I'm extremely skeptical is because I have no concrete proof that we're really, really close in having a vaccine in place. I mean, I think best case scenario, it might take more, quite a few more months. And even when we get some type of a vaccine out, counting myself as well, I'm very skeptical in the way everything has, has been pushed forward in timelines. So personally, since I'm not like a sensitive group, either due to age or pre-existing conditions, I'm going to be waiting a little bit before I get myself vaccinated, and I'm sure I'm not the exception. So considering that and the fact that the flu season begins shortly, in a month or so, in the northern hemisphere, I would tend to believe that it's quite hard that we're going to see COVID cases just moving substantially lower, decreasing substantially during the months of, like, let's say, October and November and December. So I think it's probably premature for people to be looking into rotating in from tech stocks and stay-home stocks to other stocks. So that, for all these reasons, I do believe that the Nasdaq is a good indicator of, what's going to be happening here in the markets. And we already talked about the downside target. Now, having to do with other instruments, by the way, Blake covers excellently, of course, every day, the majors. Just I wasn't here at the beginning, just making sure, having to do with the cable, I had this very interesting confluence of supports at 128.40, 128.50. Both this long-term descending, you can see it here in purple, long-term descending channels, trend line resistance, which we had broken through in July, and we could have just been back testing it. And at the same time, that was confluencing with this ascending channel trendline support. And yesterday we closed slightly below them. I mean, not enough to consider this a breakout. So far today, we just have a doji. So I'm paying very, very close attention to this key area of supports, because I do think a move below 128, technically speaking, opens up a lot more downside for the cable. So, my only comment I wanted to make, having to do with FX, unless there are any questions I need to cover, is cable at a key confluence of supports. Momentum during the past few days looks very bearish, admittedly. Within a few days, we've managed to retrace weeks and weeks of appreciation, and that tells you something. By the way, I just remembered, will Grega be with us again today?
Andre was supposed to be, but we have an interview.
Oh, that's it?
Peter Goldstein.
Oh, okay. Time flies. I mean, that's why we grow old so fast.
And if you don't believe time flies, grab yourself a clock and throw it. All right.
That's a good one, Dale.
All right. That's an old one, I think, from the
An old one,
Joe.
but a good one.
All right. So we have Peter Goldstein, and Peter wanted him scheduled later.
Let me just recap.
Go ahead.
Let me just recap. Do register for the event. It's going to be amazing. Do take advantage of the ForexAnalytix offer. It's really worth it. As Blake said, last time we had made an offer was probably more than 6 months ago. So it's not something you can count on on a monthly basis. For example, the annual plan, you pay for 7 months, you get 12 months. And all the perks and bonuses for being a ForexAnalytix member. So thank you, Dale. It was a nice week. And as always, we're going to be back on Monday. Enjoy the interview with Peter. Peter is always excellent.
Thank you, and have a great weekend, Steve.
You too, and everybody else.
Okay, Peter, I'm going to try not to knock you out of the room like I did with our guest yesterday. I didn't. Okay.
1 point for you, Dale.
All right, yeah. All right. Hi, Peter. Welcome back.
Have you unmuted him?
I asked him to unmute. Hi, Peter.
Good morning, Dale. How are you?
All right, there you are. Nice to see you. I know when you get a hold of me on Twitter and say you want you want to come on, it's because there's something that you want to document.
Well, you had me scheduled for October, but I thought that with the bottom of this correction days away, I thought it'd be timelier if I were to come and share what I got with you guys.
Okay.
Usually I come. In my previous sessions, I've always brought with me a dozen charts or two. Today I just have like 6 of them. I'm going to discuss the NASDAQ, the S&P, and Apple, since everybody's
okay. So we're not quite there yet. You go ahead.
No, we're not quite there yet. Let me tell you, I'm going to start this time with the NASDAQ. I usually start with the S&P because the NASDAQ is giving me much more clarity on the lower time frames. And so I'm going to start here with the monthly chart going back to 1985 when the NASDAQ was incepted. And, the low I could find on my chart was like 106 or so. And for all practical purposes, that's good enough.
Okay.
And so the first 15 years of the NASDAQ, we saw it rise to 5,000. And then we had the dot-com bubble burst, and that shaved off, 80% of it or so.
Right.
And then we had a, based on my analysis here, I have super cycle waves 1 and 2 being the first rise to 5,000, the manic rise, and then the cataclysmic decline into 2002. And then we started rallying for the next, I don't know, 5 years or so. But the financial crisis, even though the S&P came back down and tested the 2000 lows, even the S&P took it out by a small margin, the NASDAQ did not. In fact, it just retraced 78.6% of yellow wave 1. So the yellow is my cycle degree of trend. And then from the bottom of the financial crisis in late 2008, cycle wave 3 got underway, and everybody was tiptoeing around that initial rally. But in retrospect, look at it, it was the third of the third. Yellow wave 3 of orange wave 3. And then, of course, we had the decline earlier this year, the fastest bear market ever.
Yep.
That was cycle wave 4, and now we're having the euphoric move at the cycle degree of trend, which hit the underside of my ultimate upside objective for yellow wave 5 and hence orange wave 3. And that, of course, along other things, precipitated the decline that we started last week. I'm not saying that it is over. Actually, it's not. There's another push higher. So super cycle and cycle. And then I have 4 more degrees of trend. I'm going to go into the details of yellow wave 5 here. Right here, 4 degrees of trend: primary, intermediate, minor, and minute. In fact, if you look back for a minute, control. Sorry about that.
It's okay.
You notice that the super cycle wave, multi-decade, 40 to 70 years, was so far it's been ongoing for 35 years. And it still has more to go, right? Because orange wave 4 and orange wave 5 aren't in place yet. And then you got the cycle degree of trend, 1 year to several years or even several decades under an Elliott extension. Well, so far, it's almost 2 decades. It's extending. So far, so good as far as the cycles and the estimated time window. So now let's look at primary, intermediate, minor, and minute. Primary is a few months to a couple of years. So far, the green trend, the primary trend, we're currently in wave 4, green wave 4. I'm expecting it to drop to about 10,400, meaning retest the lows of orange wave 4, possibly even go a little lower. There's plenty of room for it to do so because green wave 2 was below 50%. So I mean, you could have that's the range, 10,300, 10,500.
Okay.
So from a time perspective, everything is progressing nicely. The primary is so far, how many months are we into it? 6 months. And we have a few more to go. I think next year, green wave 5 would be in place. And of course, my target is somewhere in the 13,600 to 14,000.
And you think that'll be next year, Peter?
Yeah, because what's happening is you're in a euphoric stage of the cycle wave. That's your look at the slope. It's almost 90%. It's practically 90% on my chart.
Parabolic.
So we are 3/4 of the way to my target, and we've done this in 6 months. So give it another 6 months, because maybe towards the end it's going to slow down a bit, and you have elections, what have you. So I think next year, once there is a vaccine, everything is priced in at that point, and the market, from a valuation perspective, is crazy right now. If you look at the S&P earnings estimates, we're trading currently at 30 times, and not only that, we're pricing in not just the end of 2021, but beyond that. So we're pricing in estimates 2 years out, assuming nothing's going to happen. So just like they did earlier this year, the estimates were going out of, they're just out of outlandish estimates. And everybody was calling for 3,700 and 3,800 and this and that. And then from 3,400, we dropped 35%. So they extrapolate, and they keep extrapolating until they're wrong. And they were wrong earlier this year. They're going to be wrong again in a few months. So moving forward, this is what's given me a lot of clarity. Again, I'm looking for the NASDAQ to bottom around 10,400, meaning the bottom of the orange wave 4, which in a way would be a back test of the horizontal red line, the top one. That's the value area high for 2020. So it's a back test of the breakout.
Interesting.
Now, to the S&P, the same thing. Went back to the 1930s. The bottom, the lowest price I could find, was $4.43 back in the 1932, I think, or something. And that was also good enough for all practical purposes. We had a sideways wave 2 that consumed 9 years, 8 or 9 years. And then we had the shortest wave 4 ever, and the reason being is that the momentum that carried us all the way to the top of wave 3, those who weren't riding that rally found it to be a great opportunity to get back in. And also you have unprecedented stimulus measures that the ones implemented 15, 20 years ago pale in comparison to. In other words, what did they do back then? They lowered interest rates. Here, they're buying every bond conceivable, since when does the Fed buy ETFs?
Yeah.
And it's crazy what they've put behind all this, and send people checks and so on and so forth. So it was the fastest rebound ever. No one could believe it. We hit a little snag, but I am expecting the S&P to bottom very soon, probably next week, because you have a Fed meeting, you have the Apple event and all that. I think it will bottom somewhere between 32.30 and 32.70. Let's call it 32.50 for all intents and purposes. And from there on, I think we're going to go north of 4,000, as high as 42 or 4,300. Now, the interesting thing is that the bear market really wasn't just a month long, okay? Because the S&P 500 isn't all the stock market. You have the transports and the Russell 2000. Those really topped in the third quarter of 2018. Their bear market has been ongoing since then, and it took a year and a half to complete. So when I see people say that that's the shortest bear market ever, well, you're just looking at the S&P. You're only looking at the Nasdaq. But other facets, other areas of the market has been in a bear market for much longer than a month.
And isn't there like a different S&P measurement, Peter? I don't know. Is it the non-cap weighted? And
Yeah, you can do the equal weighted.
Equal weighted, yeah.
Equal weighted. You can do the one excluding the mega caps and tech and all those crazy things, because all these, the mega caps and all these cult stocks, they distort the overall picture. Everybody gauges the market using the S&P 500, where you have Apple with, I don't know, what's the weighting of Apple in the S&P, 6% or something?
I'm not sure.
I know in the Nasdaq it's like 11 or 13%, something like that. I don't recall. Anyways, I am expecting it to bottom in the 3,200 somewhere. 3,250 is a rough estimate. Now, this, of course, is the monthly chart going back to 1932. This is the weekly chart. And as a trend follower, I use 2 moving averages personally to gauge the intermediate trend and the short-term trend. The green line, of course, is the 50, a period moving average, which is the 50-week here. The white line is the 15 period exponential moving average, which provides a lot of support along the way. So I'm expecting a back test of that line. It's currently at 326. There's a gap there too. So again, 325 on the SPY, 323 to 327 in that area next week. Okay. And from there on, this is the weekly, by the way. This is the weekly. Notice that on the short time frame, meaning starting in March, my target for yellow wave 5 is 4,100 to 4,300, roughly. Now go back to the monthly chart, and you'll notice that my super cycle target is 4,286, which is right in the middle of this particular range.
Wow, that's really confluence, huh?
Yeah, you gotta look for confluence, no doubt.
Yeah.
Here's the SPY on the daily chart. This move right here, again, you have the histogram, the volume profile. The top red line is the value area high. We broke way above it, and we reverted to it, and we're going to revert to the VPOC, volume point of control, which is, around 323 or so. So everybody's looking to buy at the 50-day moving average. I think we're going to slice through it briefly to take out all the stops or run the stops, and then we're going to bounce back. So currently we're in from a DeMark standpoint, today will be TD buy setup bar number 6 at the open. 6 is today, 7, 8, 9. If we get to 9 and it doesn't get negated by a bullish price flip, 7, 8, 9 would be Wednesday, which is when the Fed meeting ends. And Tuesday, of course, is the Apple event, the iPhone. So all these things, they happen around events. And of course, you have the a new earnings season to start a couple of weeks after that. So this is a nice flush out ahead of the next earnings season. So now let me talk about Apple. It's the last chart I have. Here's Apple. it was an incredible run because I never expected yellow wave 5 to exceed 460 to 480. It went, I don't know, 80 points over that, 60 to 80 points over that.
Yeah.
So we broke out of this rising wedge.
What an overthrow. And so you're looking
overthrew
for
big time. And I saw it, that I knew, I looked into the details and I saw that happening. But I've never seen a fifth wave explode like that. And the reason it exploded is because it's part of the purple or pink third wave. Purple, I would say.
Yeah, okay.
So because it's part of the, and so now because wave 2 was about, the purple wave 2 was about 40, 50%, 40, I think it was 45 or 40. When we hit the edge of the gap at 107.89, it's exactly a 38.2% retracement of the purple third wave, okay? And so that's exactly, so in essence, this is a reversion to the mean. We're coming back down, and I don't know if that gap will get filled. My guess is that it won't get filled. But we'll come, maybe it will, maybe it won't, we'll see. So 108, maybe 107, 50-day moving average, and a back test of what? The top of the wedge.
Yeah.
From there, I'm expecting Apple to go to 160. Okay, that would be the equivalent of $640 pre-split.
Okay. Okay.
And after that, it's going to get decimated with the rest of the market. So
could this top before the rest of the market?
Yeah, I've always found Apple to be the canary in the coal mine.
Yeah, so it could top before we're at 4,200 in the S&Ps and already be.
Yeah, absolutely.
Yeah. Okay.
Absolutely. Absolutely.
Interesting. So it led on the way up, and it'll lead on the way down.
Yeah, and the interesting thing about the February top is that it spent the entire month of February, forming a head and shoulders top and a double top at once. So it had a double top and a head and shoulders in the second peak of that double top. So it telegraphed all sorts of messages. And so I would really keep an eye on Apple, as well, what's going to happen towards the end too. The same behavior that we saw right here.
Right.
Okay.
Parabolic.
Yeah. Yeah. And what did we see here in late August, early September? We saw the S&P rising alongside volatility.
Right. Yeah.
And that's another telltale to keep an eye on. But what have you seen recently? S&P near the lows, yet volatility is subsiding. I'm not going to say getting crushed. It's still elevated. But you're starting to see the divergences, and those are bullish divergences. So
yeah, that'll be a pretty good tell if we trade S&P, it's 3250, 3200, and the VIX does not make a new high.
Right.
I think it could. It looks like there could be one more stab up there for a third drive, but
well, 2 days ago when we rallied 2 days ago, it was a convincing rally, and of course it was all wiped out yesterday.
Right.
But what I saw is the VIX future, not just the VIX
did
spot.
nothing.
VIX futures dropped big time.
Yeah.
And so that tells you that they're expecting this rally, this decline to end very soon. Just like the VIX futures were rising with the S&P, and that was telling you that the rally is ending very soon. And so that was a sucker move the last 2-3 days, or last week when the Apple and Tesla split. That was a sucker rally, basically. And that's about it. HYG, high yield bonds. I'd keep an eye on that, because another telltale is when it gets to 87, 88. That's where I expect it to top. 87, 88, in that range. Over 87.
You have a chart of it?
I don't have a chart of HYG,
Okay. Okay.
unfortunately, but I wanted to mention it. Is that that's when you're going to start seeing the divergences working their way slowly over weeks and months.
Okay, where we'll start to have rising yields, but it doesn't bother the market. And there'll be disintermediation for a year or so,
Yeah.
like we
Because
had in '87, where yields
Right.
were going up and the market was going up until it
Exactly.
reached a tipping point.
Exactly.
Okay.
100%.
See, I'm a mind reader. Plus, I could interpret what you're trying to say.
No, it's because you're a lot more experienced in that area than I am.
All right. Well, I tell you what a great presentation is. Is that it?
That's all, short and concise. I didn't want to
Oh
go
yeah,
into,
it's good.
because timeliness is important for me.
Yeah.
And so anyways.
Well, I'll just say, Peter, you've called a lot of inflection points here in our community, and that's why when you say, I want to get on, I find a way to do it because I know something's happening soon, and appreciate you reaching out to us to, edify our community with what you see coming right around the corner.
Much appreciated. I always enjoy coming on, and we'll see you again in a couple of months.
Okay, buddy. So there you go, everyone. That's Peter Goldstein's take on what's happening in equities. My trading warrior brother, Peter Goldstein, thank you, man. I hope that, you and everyone your work reaches are able to navigate this. I hope that you and your loved ones remain untouched by this virus. Do you have any view, like you think there is going to be a vaccine, Peter? You believe there's going to be one?
No doubt about that. In fact, there are a couple of dozen vaccines. They're just slowing the, they said there won't be a vaccine until a year and a half.
Yeah.
So no matter what they say, it's all, we're going to have one in November, this and that. They said from the get-go, it's going to be in 2021.
Yeah.
And that's why I feel that once we're pricing in all that stuff, right? Once the vaccine is out, we're back to reality. There's nothing more to look forward to. It's going to be the top of the market.
You know who else said something like that to me? Peter Bookvar.
Right. Yeah, because the market is a discounting mechanism. It prices everything in, and eventually when it sells the news.
Is it pricing in, what's the market pricing in on the election coming up here in less than 2 months?
You know what? I called the Trump win in 2016 based on what I was seeing in the market. Right now, I don't think the market cares who's president. Okay.
Yeah. Because as long as we have a transition of power.
Yeah, and
or a peaceful resolution to it.
Yeah, I mean, the presidents don't make markets. They can't. I mean, they shouldn't be taking credit for what happens in the market. But let's say that Biden wins, okay? And first few months are transitional. Everything is going on slowly. And then, what happens after that? Think about it. So I think whoever is president in 2021 is going to preside over one of the most miserable times from a stock market perspective.
So you think that we complete all your super cycles in about a year? I know some people talking.
Here's the interesting thing. I failed to mention something. Let me go back quickly and mention it because it's important. Let me go back to here. This is super cycle wave 5 in the NASDAQ would carry us to say 15 or 16,000. Okay, so the coming correction, the big drop, will be super cycle wave 4 followed by super cycle wave 5. But if you look at the S&P, super cycle wave 5 will be in place when super cycle wave 3 in the NASDAQ will be in place. What does that mean? That means when we drop down, it'll be super cycle wave 2 on the S&P, right? And then what will happen? When the NASDAQ gets to start its super cycle wave 5, the S&P will be starting a new cycle wave 1 of super cycle wave 3. So the S&P is going to retest the highs and drops again. It's going to go up and back down, similar to the sideways movement in the S&P that we saw in the first decade of this century. In other words, yellow wave 1 will begin once orange wave 1 begins. The top of yellow wave 5 is orange wave 1. We'll drop back down here and start yellow wave 1 of orange wave 3. And yellow wave 1 will retest the highs and then retraces much of it afterwards, while the NASDAQ is doing what? Completing its super cycle wave 5. So what I'm expecting is a very sideways decade. It's going to be a horrible decade, in my opinion. A lot of sideways movement for much of the decade.
Okay.
So it could be the lost decade again.
Okay. All right. Well, having your roadmap won't be a lost decade for us. So thank you very much, Peter.
All righty. Thank you very much.
Have a great weekend. Everyone else, have a great weekend. Peter Goldstein, Hamashu is his name, and you can find him on Twitter at Peter Goldstein. So that's a wrap, everyone. Have a great weekend. Remember, don't just count your shares, count your blessings, and we'll see everyone on Monday.
Thank you, Dale.
You're very welcome. Thank you, Peter.